Happy Friday, everybody. Welcome back to the channel. This is the weekly Market Insight series brought to you by the Capital Markets Trading Desk right here at SunWest Mortgage Company. So without further ado, there's so much to share with you. Let me just get started, okay? So the market remained volatile throughout the week, with stocks plummeting on Thursday amid fears that reciprocal tariffs from the U.S. government could lead to a global trade war. On Wednesday, President Trump laid out the U.S. reciprocal tariff rates that more than 180 countries and territories will face under his sweeping new trade policy. Companies whose supply chains depend on overseas manufacturing were the most affected by the tariff announcement. Bond traders are anticipating 4 quarter-point rate reductions from the Federal Reserve this very year. The ISM Manufacturing Index contracted for the first time this year, dropping 1.3 points to 49 in March. Any reading below 50 indicates contraction. The figures indicate that momentum for the sector has stalled after 2 months of expansion. Factory orders slumped by 3.4 points from 45.2, the lowest level recorded since May 2023. Prices surged further into expansion after accelerating by 7 points to 69.4, the highest since June 2022. The U.S. Bureau of Labor Statistics released February's JOLT jobs openings report on Tuesday. The report revealed a slight decline in job vacancies in February. The number of available positions decreased by 194,000 to 7.6 million, falling short of the forecast 7.7 million. The data suggests a slight cooling in the labor market, with businesses reporting fewer vacancies than expected. The ADP National Employment Report revealed that private sector employment exceeded expectations, adding 155,000 jobs in March. It was a sharp increase from February's upwardly revised 84,000 and above economists' forecast of 120,000 jobs. The gains were driven by professional and business services, financial activities, and manufacturing. Meanwhile, earnings rose 4.6% year over year for those staying in their positions and 6.5% for job changers. New orders for U.S. manufactured goods posted a second consecutive month of gains in February as businesses moved to get ahead of tariffs. The Commerce Department said factory orders climbed by 0.6% to $594 billion during the month after surging by an upwardly revised 1.8% in January. Analysts were expecting a 0.5% increase. The department also said shipments rose by 0.7% after rising by 0.5% in January. Unfilled orders rose by 0.1% to 1,403 trillion, while inventories also increased by 0.1% to 865 billion. Mortgage rates remained essentially unchanged at 6.7%, while mortgage applications declined for the third consecutive week, dropping 1.6% for the week ending March 28th. Refinance activity decreased 6% from the previous week, but was still 57% higher compared to the same week last year. However, purchase applications saw weekly gains of 2% and were 9% higher than in the same week last year. Purchases have posted year-over-year growth now for more than 2 months as inventory continues to increase. Continuing jobless claims for U.S. unemployment benefits rose to the highest since November 2021. Continuing jobless claims increased by 56,000 to 1.9 million for the week ending March 22nd. Initial jobless claims decreased by 6,000 to 219,000 for the week ending March 29th. The data suggests that initial claims remained relatively low, while the increase in continuing claims indicates it is more difficult for unemployed individuals to find new jobs. And that's it for the week. I told you it was going to be a lot. But as always, stay locked in here so you stay current on all our market news. Also, if you like this video, yes, you can just hit the like button. You may share it, and also please subscribe. My hope is always to keep you in the know of the latest world news and, of course, our pricing incentives. Well, again, it is a happy Friday so far, so have a very awesome weekend, all of you. Buffy, out.